Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the daily market analysis show where we look at the markets, how it performed today and how we can plan for a better trade tomorrow. And this analysis is for now the 18th Thursday and expiry date 2021. If you're not subscribed, please subscribe and share it with friends and colleagues so that it benefits all of us. So what kind of market we had? The market had again fallen to the grips of the bears, and let's see what is what is happening. This is for November 18th, Thursday. Tomorrow is an expiry day, and we'll be looking at all of these candles, all of these patterns, all of these parameters that is on the left side on the charts, and then we'll try to analyze. And additionally, we'll have data analysis based on volatility, institutional participation, sectorial analysis, and open interest data analysis, global commodities, and then we'll wrap up with some action base for tomorrow. So let's get into the action. Price action today. This is the price action. It's an inverted hammer. Further fall down. The wick size indicates the bear pressure. Hammer could indicate a reversal of the current downtrend. Hammer here again, the magnitude right side. Hammer could indicate a reversal of the current downtrend, but the wick size indicating bear pressure. And this is a hammer again here as I told, and it is at a support. So this is exactly what happened. It lost 100 points today. Formed an inverted hammer, lost 18k support, and 18k nearby had a 20 moving average Bollinger Band median support also, that is also lost, and 18,000 rounding number support level is also lost. Previous swing low also, So Bank Nifty also has formed an inverted candle. And this inverted candle could be entrance route, so there's no confirmation for that. The wick of the hammer indicates the bear pressure from the top. Bank Nifty lost 265 points and it settled near the support zone of the 38k support. Well, intraday what happened was Bank Nifty nipped, there was no gap down. It went sideways and then it went down, and then it went sideways and then attempted to go up, but faced resistance 18k and then finally fall down. Bank Nifty did a gap down actually, right? And then it rebounded 450 points after a 250 point back down, so it was very volatile, and then finally slipped down to settle at the previous support level of 38,000. Bollinger Band really moving after support is gone, as I said. So Bollinger Band's expansion is seen on the Bank Nifty on the bearish side. So it is slipping. Also the expansion is happening there, but Nifty consolidation is what is happening. So it's a sideways Nifty and the bearish Bank Nifty on the Bollinger Bands. We can see all of this here. So this is Bollinger Bands. Nifty, you can see that consolidation of the bands, moving average support, slipped from their Nifty, right side Bank Nifty. The Bollinger Band expansion on the bearish side, bearishness continues. Bollinger walk started, clear bearishness. Moving average median is far, volatility is high because of the band distance, and this looks like Bank Nifty is going to slip more, and Nifty may follow that. Without Bank Nifty can survive. So support resistances, you can see that today we had the 17,952, 18,000, that support is gone and slipped from that, and then it had settled near to 17,900, which is also some kind of support zone where some of this candle from where it dropped out had resisted earlier. So you can say that the current 17 is the kind of support level. If that is gone tomorrow, it could take support at 17,800, which is a previous window, and if that is gone, then it could take support at near to 17,600 level, which is the previous window. If that goes, it goes to 17,350 and then 250 and then 17,000. That's how it is. Upside, we have the previous swing low area of 18,000 would be the first resistance to take out. Above that, we have 18,100, which is a resistance to take out. Then another resistance 18,200, another resistance 18,400, and then above that 18,600 all time high. Bank Nifty, you can see that it had a support of 38,500, slipped that and then settled at 38,000. So the immediate support is 38,000. If that is gone, then 38,700. If that is gone, then 37,400. If that is gone, then 37,100, 37 near to that range. That's all is what the supports are. Upside, where it slipped from is 38,500 was first resistance, and then 39,000 founding number Fibonacci retracement very. Then next resistance and upside will have 39,500, then 40,000, 40,200 that zone, then above that 41,000 and above that 41,800 levels. So support resistance on the bank nifty. So we have seen both levels. Make a note of these floors, these levels clearly, so that whenever the slip happens, you should exactly know where you have to get out from the game. Also, the upside, if the market is going down, resistance level will be there. We could attempt for a short sell if the view is bearish. We could trail our stop losses accordingly if it is supposed to be that. Bollinger Bands we already seen. Momentum divergence, you can see that it is sideways from the Nifty still. And interestingly, Bank Nifty has gone touched on the bearish zones that is below RSI 40. Now weekly momentum also Bank Nifty has gone to the sideways and it has lost the bullishness. It's a medium term. So short term and medium term momentum is bad. So that is even more bearish than Bank Nifty. But Nifty it is still sideways. Weekly also sideways. It is not lost. Weekly bullishness is still valid. Short term sideways. The momentum divergence on weekly is still there. Weekly, which is bullish. Just left halfway. That is still valid. Trend indicators ADX is showing that the trend is in the bearish zones, DMI negative of Bank Nifty also. You can see that the negativeness is increasing. The strength of the negative trend is increasing. That means it is getting more and more bearishness. But Nifty, the strength is not increasing, it is going down. So although it is DMI negative and the trend is bad in the short term, it is not increasing at least. Right? And the higher time frame also in Bank Nifty, the trend is in the bullish zone still for Nifty and Bank Nifty, but Bank Nifty had this advantage of the trend bullishness rising, but it has taken a bank today. So the trend is not that great for both the legs in short term. Bank Nifty is even more, a little more worse than Nifty. So volatility, if you see, you can see that it has been forming a range from 15 and 20. Today it had slipped below the 15 and closed around 14.6 levels. IB is also 14.9 levels, and IB implied volatility is 14.6, and India, which is where the volatility is 14.9. So IBP has also dropped to 28.2. It is not that great. The volatility is again dipping down. There is a contradiction also here. The market is going down, which is ideally supposed to go up. So this is going down means it could indicate that the current downtrend may sustain longer, probably, right? So that's about the volatility. In open interest analysis, if you see, left side you have Nifty. Overall, it's a bearish chart because the call writing is already dominating both the charts. You can see that a lot of call writing is additionally got added. The changing of interest. A lot of additional call writing has happened here. Support is at 17,800 and 17,900. Both levels put writing is seen, and resistance seen as 18,200 and 18,000 also. So it's between 18,000 and 17,800 that the tomorrow that's where it's going to happen. You don't know where it is. Bank Nifty is call writing highest is at 39,000 and 38,500. 39,000 is having put support maximum. 37,000 is also having reasonable put support downside. So 38 and 39 is where the price action is going to be for the expiry tomorrow. Sectoral performance today, if you see, I know it is slight given on the IT is bullish, you can say. When the momentum goes pretty on a short term, still, it is only a minor few points, 10-15 points of price, let's see in the index of the IT, but overall it's not bad in the downtrend. Metal down, auto slightly closed up, right? Momentum is okay, so auto also stock picks can be done because the edge if the momentum sustains. Pharma is down 1.5%. FMC is also flat, there is a doji pattern. Realty also closed down 1.5%. So all sectors except IT and auto is not having enough momentum to go long, right? So that's institutional participation is once again bad, but small selling from the Fyers side, and flat. Therefore, institutions and the domestic institutions did not support, so that's why market fell. All other days they have been buying. Today they didn't do anything. Overall, the domestic institutional purchase is dominating as compared to the Fyers. Fyers had sold 25,000 crore last month. This month is 6,000 crores as of now. But there is also not buying today, is further increasing the situation's bearishness. Dollar index, if you see, it is shooting up and up and dollar is strengthening, but it is not reflecting in the currency pair USD INR. It was a bearish day. It was a bearish day, which means the rupee strengthened today, and just hovering around the support zone. It is said that the US dollar index is based on the European market and not the Asian market. But ultimately, some impact will always say that as the dollar is impacted. So the dollar is kind of settling at the same 4.25 kind of range. The previous major support zone is there, and it has not fallen off the channel on the downside also, although it has faced with resistance on the channel top and then fallen down several weeks back. So that's about the dollar and currency pair. And that crude oil has cooled off is good thing. 79 levels it has come for the dollar after a long time, but still it is an all-time multi-year level. Gold is breaking out and then facing resistance, but today we have a bullish candle, so gold is bullish going ahead. Cup and handle breakout is what is happening on the weekly basis. No major downward approach seen as of now on the Dow Jones, Nasdaq, and the S&P 500. As of now, the European markets are all flat or no big moves are seen. I'll watch this again on the pre-market to get a close. SGX is reflecting the same. If that is reflecting, then most likely there is a chance that the big move will get reflected in our market also, whichever side it is. Now, two picks actionable for the day is one is Birla Soft, which is showing some kind of triangle pack breakout, and if you look at the volume, huge buying is happening. Somebody is buying huge amount is good, trend is good, and volumes are good. And there is a breakout pattern that is also seen on the weekly and daily. Maruti Suzuki is another auto stock. So auto and the IT are performing, both one picks are there. So this is having some kind of inverted head and shoulder kind of pattern, which is breaking out, and it has come out of the. It is broken out and closed green above this resistance zone. So there is a further resistance, but it's far away and a lot of points to catch before that. So auto seems to be breaking out. Maruti also charts are showing that there is multiple times tested resistance that is being taken out and inverted head and shoulder pattern. Wrap up is moderate bearishness as per the chart. Short term for tomorrow. Chart shows that the momentum has slipped and the trend also has lost. So it has to come back. So it is facing resistance on the momentum side, it's facing resistance on the charts also. Every time it tries to go and hit 18,000, or every time it goes, it is facing before that it goes 100, it goes 200. So see the resistance on that side. Right? Open interest data also showing that there is huge open interest resistance call writing is happening in that zone. So that indicates the revision. There is an expiry day, so volatility can be there. And it's on the downside as per the charts. So Nifty charts are weaker and Bollinger Band seems to be skews breakout. So not skews, it's actually spilling out on one side the bearishness. So 20 moving average support is lost for both indices. Fyers are selling. Day is also not supporting. Inverted candle could be a trend reversal. Then divergence still there in Nifty, which also can cause a bounce back. Another reason is the VIX is falling and the market is also falling, which is not normal. That's the reason. Why it is moderate, not heavily bearish, right? But otherwise, it's a bearish as the charts and institutional data is saying. So volatility has lost the 15 range. We were talking about the 15 to 20 new volatility range, which is broken today and fall down to 14.9 kind of levels. We don't know whether it will fall further down or it will bounce back to that range of 15 to 20 once again or not. But yeah, so VIX is not matching, as I said before. The volatility indicator of the index is falling while the index also is falling. Just the other way, index is moving up, but only then VIX is supposed to fall down ideally, right? So it may not sustain, it can bounce back also from here. So it is, there is also possible volatility expiry. It can be seen. The gamma effects can also be expected tomorrow, but it's not a monthly expiry. It's 1 more week, but it's a short week tomorrow. This next week, 19th is holiday, I believe. So always go for spreads so that the risk is managed, as I say every day, because of this huge volatility, trend reversals and V-shaped moves, and the escape from the only way is to take spreads, particular spreads or current spreads. Like a spike, if you're expecting, probably current spreads or can help, right? So always go for spreads or hedge strategies, not naked ports of goods. That's a view that I have. That's a wrap up of all I had to say. We have actionables, you have a price action details, you have what the chart speaks to you. All of this in front. I hope this helps you to form your own view and then plan what to trade tomorrow. If that helps you, then please hit that like button and then share it to your friends and colleagues. And thank you so much for watching. Happy trading, happy learning.